What's going on, everyone? It's Justin Spittler here, aka JSpit Trades. I want to welcome you back to the channel if you're a regular viewer. If this is your first time checking out my channel, I also want to welcome you over here. We dig into the charts. So I'll usually start by looking at SPY or the Qs, the indexes, and just get a overview of how the broader market's doing, and then typically I'll dive down into a specific theme or area of the market I'm watching. Sometimes it's a sector, sometimes it's a lot of charts from a lot of different industries and sectors to just look under the hood and see what's really going on. But in this video, we'll start with the SPY and the Q as we usually do. But then I want to dive into some sector ETFs that I think have a very interesting pattern shaping up here. Something peculiar has happened in a lot of charts that I have been looking at and watching very closely. So I'll cover that. And then at the end of this video, I'll share some areas of the market that I like right now. So let's just jump right into it. The first thing we're looking at here is SPY. So you can see that SPY has had a good week. We're up 1.7%, and this is our third week in a row where we have the potential to close green. And by all indications, I think we'll do that because of how strong the market's looking right now, and we'd have to really have a nasty Friday to erase the progress that we've made so far this week. But when we look at SPY, what do we have? We have this big run up, then we had the pullback. They got a lot of people spooked. I think a lot of people were thinking the SPY would come back down and test this key level down here, which we have this prior shelf here where we traded and consolidated a little bit, and this also goes back to the prior cycle high. So I think this was a level that a lot of people were watching. But the fact that we didn't get back down there, the fact that we recovered it and are starting to get back on track before going and making that key retest, to me is bullish and speaks to the strength of this market. So I really like what I'm seeing from SPY. And it's a very similar story when we switch over and we look at the Qs. So, very similar price action. We have this big run up, sideways consolidation. Then we had the pulled back into a prior, consolidation shelf that we have here, and then bounced off that. And now we're getting back on track. And this is very encouraging to see because this is showing that tech is starting to recover a bit here and starting to get back on track. So that's important, not just for the Qs, but also for the SPY, since it's the biggest, most important sector for U.S. stocks. The New York Composite Index is also looking strong after a little pullback. So you can see here, rallied straight up, broke that trend line, but we came back down to a key support level, bounced off that. Now we're getting back on track, and the NYA is up 1.9% on the week. So this is looking like a very healthy candle. So I'm really liking what I'm seeing here, but also really like what I'm seeing when I'm looking at a lot of these. These aren't your headline index fund ETFs. They're a little bit more niche in some instances. So we got the basic materials we're going to look at in a second, healthcare, financials, mid caps. We'll also look at energy. But the first thing we're going to look at is the equal weight S&P 500 RSP. And this pattern that you see here at RSP is a pattern that's playing out in a lot of areas of the market. And it's essentially, we have this big run up, broke out to new all-time highs, and then we had this pullback, and we pulled back. That got a lot of people concerned that we were potentially putting in a false breakout. We saw this across the board in a lot of different sector ETFs and a lot of more niche ETFs as well. We saw this pattern play out. So I think that got a lot of people spooked, and it was something that was concerning me because you never want to see a bunch of key areas of the market, key groups of the market break out to all-time highs only to reverse that swiftly. But we've gotten back on track. We came back here, we bounced, and now we're back above the rising 10-week moving average. So to me, that's very encouraging. But more importantly, we're back above these prior cycle highs. So this is, in my opinion, is looking like what a lot of people were seeing was a false breakout, might have just been a false start. In other words, the market wasn't ready to move higher just yet. And we had this little shakeout to kind of spook people and get, people to flip from ultra bullish to bearish, and, just sort of a reset before the market can march higher. So that's what we saw from RSP, but we also saw basically the same pattern play out in the materials ETF. So this is XLB. What do we have here? We break out to new all-time highs. Then we broke down, had this scary little flush. We've gotten back on track, back above the 10-week moving average, and back, more importantly, back above those prior cycle highs. Same with healthcare. albeit not as strong. It's not as convincingly above these prior cycle highs yet, and it's not above, or it's coming up and contending with the 10-week moving average yet. So this has a little bit of work to do, but overall, if the market were to close right now, this would be a nice reclaim of those prior cycle highs, and so this would be bullish action to me. So healthcare is looking like another example of a false start, or at least that's what a lot of people saw, turn into a false breakout is what a lot of people saw, but in actuality, what might have played out was just a false start. So may have just needed more time, and you can see in this case it came back down and tested this trend line that also dates back to the prior cycle highs. So you have some confluence here. I'd like to see healthcare getting back on track because it is the second largest sector within the S&P 500. So that is very important. Financials, another instance of a breakout to new all-time highs. So we had the pullback, and then we got back on track, and now it's just looking like that was a false start. Just needed a little bit more time. And financials are working like this. This is such a big, important sector for the market because you go onto FinTwit and maybe the doomer corners of YouTube, and you'll find a lot of people who are calling for a crash and a repeat of 2008. Or even a dot-com bubble type event or big blow-up, financial crisis type event. But I'm just not seeing that because of the strength that we're seeing from financials. And you have a lot of individual financials stocks that are breaking out to all-time highs and looking really constructive. So I'm going to switch gears a little bit, but I just wanted to show you this chart of Goldman Sachs. Look at this base breakout here. That's really constructive. Morgan Stanley is also looking really good. This is looking like it could break out any day now over these late 2023 highs. So really constructive action from some of these large banks. Citigroup also starting to look constructive here. Not quite at the prior cycle highs yet, but does look constructive here and does look like this could break out of this consolidation pattern we've had. So when you have the big banks acting this well, I think it's hard to be super bearish on the market. Just another example of a chart or an ETF that looked like it had a false breakout, but in actuality, what we may have just had was a false start. So this is the mid caps MDY. It's the same story. You've seen this chart several times now, but I just want to show it to you to just really drive home the point that we're just seeing this over in a lot of different areas right now. Even energy. Broke out to highs. It didn't. It did. It broke out to over these highs here, and it's starting to get back on track here. It hasn't quite reclaimed those late 2022 highs yet, but we're working on a little bull flag here, and I'm starting to see some leadership emerge within the energy sector. So XLE is looking pretty solid. And then lastly, I want to look at ACWI. So this is the all world ETF, and it's the same situation. Broke out to new all-time highs, got everyone bowled up. Then we had this, pullback where we lost the rising 10-week moving average. So that got a little spooky. That we might waterfall, and the global stock market might fall apart. But we swiftly got back on track, and now working on our third green weekly candle in a row, and we're up 1.5% and within spitting distance of those prior all-time highs. So this is looking really, really solid here. And I don't know how you look at this chart and the price action in this all-world ETF, and you think that the stock market's about to fall apart, because this is as representative of the global stock market as you can get. I know a lot of us, if you're watching this video, there's a good chance you live in the United States, and SPY and the keys are probably more important to you. But I just don't think we'd be in a situation where the U.S. stock market was about to completely unravel at the same time the all-world ETF is getting back on track. So it just doesn't make a lot of sense to me. So what caused this? Like, what was the catalyst this week that helped stocks? Well, I think one of the things working in stocks' favor this week was that the dollar, sort of ran out of steam here. You can see, so it's breaking this trend line that has from all the way back to October of 2022. You can see that it's been grinding higher, and it had this consolidation, several days up here, several sessions up here, and it looked like it was shaping up to begin another leg higher. but we have broken down, and you can see we broke down a few days ago. Then today we came up and we tested that level and got rejected. And so I think stocks really like that. They like to see the dollar not rising, because a strong dollar, a rising dollar, can often act as a headwind for equities and other risk assets such as crypto. But as of now, this looks like it is taking a breather. We could come back down and test this rising 50-day moving average. We've already tagged it once and bounced off of it. But even if we come back down there and test it, and that rising 50-day holds, that doesn't necessarily mean that we're going to rip off this level and start heading higher immediately. We could trade sideways for a bit, and then we could, there's also the possibility that this breaks down and heads lower, which would be ultra bearish for stocks. But I'm not ready to go out on a limb and say that's going to happen. But I do think over the next few sessions, at least, that the dollar could potentially continue to show weakness. So something to watch. The other thing I think that's working in stocks' favor right now is just the fact that bonds have stopped falling. So you can see TLT here. You can see we put in a top back in December, and we've just been falling ever since. But over the past few weeks, we've found support at this level here and sort of stabilized. And when bonds stop falling, that means interest rates also stabilize. And so that's something that the stock market can contend with. Stocks really don't like it when interest rates are ripping higher, and that's not happening right now. So I think the combination of the dollar rolling over a bit, at least for the time being, and then the stability in the bond market is making things easier for equity investors. As far as what areas of the market do I like right now, well, I'm not ready to go out on a limb and say that all stocks are going to rip higher. Although I am seeing participation in a lot of different areas, but I still have some concerns about your small caps, your really speculative growth stocks. I think those areas, like such as your ARK names, I don't think we're in an environment yet, given where interest rates are at right now, and there is still the potential for the dollar to strengthen in the coming months and weeks. I don't think we're in an environment where it's just like 2020 where everything is working. I think you still need to be selective. And so if you're going to go out and you're going to get involved with growth stocks or technology stocks, I think you want to stick with quality. And one of the easiest ways to do that is just move up the cap scale. And so I think your large cap, mega cap growth stocks are a good area to be. And you can see when we look at the Schwab large cap growth ETF, this is the ticker SCHG. You can see this looks really constructive, and it's almost already back to all-time highs. And just the strength of this, when you compare it to something like ARK, they're not even comparable. They're in completely different universes right now in terms of strength. So I think the large cap growth has a potential to continue higher. I think there's a stronger likelihood that happens versus that all this money rotates into speculative growth and the archetype names. I don't think we're quite there. As far as some individual names that I think are pretty interesting here, I think CrowdStrike is potentially setting up. This was an early leader, had this tremendous run, and it's just basically not done anything for all of 2024. It's just consolidated and just sort of chopped around above those prior cycle highs. And this is starting to get back on track. We're back above the rising 10-week moving average, and this level has held. And so if we do see tech participate going forward, particularly software and cybersecurity, I think CrowdStrike could get going. My only concern with CrowdStrike is it's a bit expensive, and expensive stocks have not been performing that well in this environment. And I think that has a lot to do with where interest rates are at. But nonetheless, this is a best of breed name, and easily the strongest semiconductor name. Just has a lot of long-term, secular forces working in its favor. So I really like that name. And then, semis work. Semis participate, which they have been. They have bounced back quite nicely. And we've had some new leadership emerge within semis, such as Onto and Form. Those are some smaller semiconductor names. Camtek, another smaller semiconductor name, also did well. Those names had some big gaps up and have run up quite a bit over the past few days. And I think you want to watch and see how those consolidate. If those are names you want to get interested in. But as far as larger names that I think could participate to the upside, I like NVIDIA here, but I also like Clack. This is another strong semiconductor name that's been holding up quite well. And I think this is a name that could, rip to new highs if we see some rotation into tech going forward. As far as other areas of the market, I really like how metals and mining are shaping up, and that includes both your copper names, your industrial metal names, and your gold stock names. I think both areas of the market are really interesting right now. And one reason I like this is because we're still in the space. We're starting to climb out of it. I think it's only a matter of time before we come up here and test these levels up here, these prior highs. But we already have some individual names that have broken out and are some of them have broken out to all-time highs, and it's just blue skies above. They don't have any resistance to contend with. So those would be names I would favor. But one of the reasons I mentioned the metals and mining ETF is because we do have some inflation data coming out next week. And, I don't have a crystal ball. I can't tell you exactly how that inflation data is going to come in. But I will say that your metals and mining names, your energy names, I think those areas of the market could hold up better. And I don't think it matters necessarily how inflation comes in for those names compared to your techie and growth areas of the market, which are more sensitive to interest rates. I think these metals and mining stocks could do well in either scenario if inflation comes in hot or it shows signs of cooling. So that's one reason I like them. Copper within the group is one of my favorite areas. You can see this is starting to break out of the space. You have some individual copper names that are looking really good. Freeport is just consolidating below this resistance level, below this prior highs, while the rising 10-week moving average catches up. I think this makes a move soon. Looks really good. Tech Resources is even a little bit stronger. You can see this broke out of the space here and has just been gliding higher. And with the XME starting to shape up again, and the Copper Miners ETF looking like it's about to make a move again, I think both of these names have the potential to do well. GDX, gold stocks, also looking well. A little bit of a choppier situation here. I actually prefer the copper names, but I think a lot of people sleep well at night owning gold and gold stocks because they, view them as a potential hedge against market sell-off or political uncertainty. So I understand the appeal of the gold stocks, and I have some gold stock exposure as well. The last area of the market that I want to mention before I sign off would be circling back to energy. Really like how energy is starting to shape up again. It looks like we're just putting in a little flag here, a little bull flag after briefly breaking out to new highs. We just pulled back, consolidating. So looks like it's going to get back on track, similar to a lot of the other charts we've looked at in this video today. As far as individual names, I think Diamondback is setting up really nicely. You can see it's just consolidating and looks to be putting in a little bit of bull flag here. Sorry I didn't have the lines drawn on this chart, but I like how Diamondback is setting up. That's FANG. And this is a name that's been a leader within energy. So leaders have a tendency to keep leading. So if energy is going to participate to the upside, I think FANG could be a name that outperforms going forward. So that's it for today's video. Hope you guys found this informative, and I'll talk to you soon.